All right, guys. So as always, I put the timestamps down in the bottom of the video below so you can skip to whatever you want. So if all you care about is price and where we're going next, feel free to skip to it. But for everybody else who wants to learn something, we're going to talk about major trends and patterns in the market, and we're going to see this confluence taking place. We're going to start with Bitcoin because crypto is a great place to learn technical analysis because you get these clear patterns so often on a very, very regular basis. A lot of people in the crypto community make fun of this this pattern right here, right? They say it looks like Bart Simpson's head, right? You kind of have these two straight up and down sides, right? And then you have a spiky hair. Okay, well, that's just Wyckoff. We've talked about this in videos in the past, all right? So you get this leg up, and then you get this distribution up here, and then you come back down to where you took off from, okay? So this whole portion up here is the key part, okay? This is where retail has been convinced to buy, right? On the upswing, the price, the upward trend in price has justified sentiment to chase, okay? So people are FOMOing in. Meanwhile, all the people who started the run in the first place are now dumping on you, okay? That's key to understand because this happens all the time on a regular basis. Some other examples we talked about in the past were BHP, okay? This is a major company. All right, what's their value here? This is a $165 billion company, okay? And you had clear Wyckoff happen here too, all right? And you could see we came back down to that zone and then you take off again. All right, well, this is all playing out again, all right? And we're going to take a look at some. Looking at the Dow Jones, what do you see? See this leg up? Distribution. Come back down to where it started from. How about First Majestic? You get the same notch up, right? Distribution. Back to where we started from. Hecla, are you seeing a trend? Huh? Come up, leg up, right? Distribution. Come back to where you started from. It's really happening here and things like GDX2. It's just not as clean. It's not as obvious. But when you look around the market like we're doing, you start to say, I see what's happening here, right? GDX. Whoop, whoop, whoop. Does this look familiar? Let's check out something else. I think I know something that looks like this. Oh, yeah. It's uranium. Whoop, 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 whoop. Bloop. Is this starting to make sense? You starting to see the confluence of things happening across the board this way? What a surprise. NXE. And then here on Global Atomic, bit more clean, right? That's more traditional look to it. Okay. And where do you think I got these price targets from? All right. The second lower bound. All right. We're going to get to that later. You hear about what happened to Amazon after hours? I mean, look, it's down 10%. Oh, we can measure it and see. I mean, it's down, 8%. 8% on what? Well, they missed earnings, just like most of these companies are. They're all missing earnings, all getting an excuse to roll over, aren't they? All getting their excuse to start rolling over after they've been doing, up here doing what? Distributing. Where do you think it's going to go based on everything we've just looked at? Where do you think it's going to go? Just saying. How about Agnico Eagle? A little leg up, distribution, and where are we going next? Yes. Even some of the smaller names are telling the tale, right? Even steel, to a degree. I mean, we're kind of putting in the same kind of thing, right? We put this leg up, and then we come, distribute. Notice these upper wicks. It doesn't like going up, but it's up here anyway. And then we're coming down. We get the first test, and then we come down to what's likely where we started. A Sprott physical. Little jump. All right, we get your jumper, your distribution, and then down to where you started. Oh yeah, and take a look at Fluor too. We came up, made this nice left side of Bart's head, right? Whoop, 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 whoop. And then here we go. So what's the point? What do I think? Well, the thing is this confluence exists not due to coincidence, okay? It is a confluence. Part of it has to do with what's being manipulated and what has algorithms involved in the trading. Okay, so you can look for these things and find them, but when you see them playing out with strong confluence like you see right now across so many sectors, across so many things at this particular time in the market with everything that's going on, then you should take note of it, okay? And this is why we have two buy zones, all right? First of all, you always have two buy zones. Never have one buy zone, all right? Because that implies you're going all in, and you never go all in, right? You always want to have at least a little cash. So we talked about spending half of our cash here at these levels, right? Okay, and we've had nice bounces here. So far, we are vindicated. So far, we have called the bottom, okay? However, we realize that there's a potential for another leg down. And if that happens, if we're wrong here, we have a backup plan in mind and we have cash ready to take advantage of it, okay? Now, how did we come up with this second line? Because look at everything we just talked about. All of this Wyckoff, all of this distribution. Where does Wyckoff always end? Well, it ends where it started, okay? So you get this bump up and then it comes down. That's where you almost always make it back to, almost always. Now, you know, this stuff's not 100%. You don't always get it exactly whatever. You just have to look at it and pay attention and let it play out and you know, act on it when you see it. But that's the target. Okay, we know that's the target. And not only is that the target, but it also has confluence with these other sectors. Okay, so you go from one individual equity to another, and you're going to find that this takeoff zone, which is our target for the second sell-off, has more than confluence here. It has confluence back here too. I mean, look at URNM. This is where it took off from. This would be the target. And it has confluence back here. I mean, that's not a coincidence, okay? And you can find this playing out in pretty much anything you look at, okay? So that's why I'm saying, look, right now, you've got some things that are coming down, trading sideways, all right? And that's good. That's better than kind of trading up and forming a bear flag. Right now, I don't see any bear flags, and that's a really good sign, okay? Because you could possibly be coming down and then kind of trending up like this, and that would be a bear flag. That would imply you're probably going to roll over again. But we're not seeing that, at least not yet. All right, so right now we're just kind of coming down and trading sideways, and that's good. That's good. So we have reason to be encouraged, okay? And all we have to do is remain patient because nothing about our strategy has changed. So far, what I'm seeing in the markets is we're kind of going through that calm period. And this is what I'm talking about. I tweeted this out, the 26th, so 2 days ago. I said, I've seen this before. Some big bullish names across the commodity space are being stubborn on their sell-offs and aren't in confluence with the rest of the market. We will trade like this until they find equilibrium in price, support levels, RSI cooling, etc. You know, and I ran out of words, but you know, things like volume will be off. So from one equity to another, you might see something sell off a couple of percent, and then something else might sell 5%, and they'll have dramatically different volume in this kind of phase of things. And this is what I'm talking about. Because you look at something like NextGen, it's kind of coming down and trading sideways. Why? Well, it's already reached its first major level of support. Okay, so anything further down would be, you know, starting to get massive extreme oversold. Well, in the case of something like Cameco, it has not even reached the level that NextGen's at. It's being stubborn. It has not sold off as much as the rest. Everything else is testing its 200 on the daily, okay, or it's testing the 50 on the weekly. All right, Cameco is being stubborn. It's hanging up here. All right. And so that's why if you look at the daily on Cameco, you see how it's just trickling down, 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 down. Okay. Where NextGen went down, 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 sideways, 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 sideways. You see? And that's what I meant when I said this days ago. Some names are going to be more stubborn. And so you have to wait for this confluence to arrive when everything kind of hits equilibrium. Because right now, Cameco is still expensive, right, compared to its peers. I know long-term fundamentals, blah, blah, blah. All right, but on the technicals, it has not cooled off as much. And maybe it won't. It doesn't have to. There's no rule. There's no law saying it has to do that. But I'm telling you right now, that's kind of what you're looking for, okay? Now, with that in mind, I think you might still get somewhat of a divergence in lower bounds. So something like Global Atomic looks like it really wants to come down here to this 263 level. Okay, and it might do it by itself without NextGen. Does that make sense? So that's why on my target updates, I'm saying, look, if something breaks down below its initial level of support that we talked about, then I gave you secondary prices. So just as kind of a generality, these were the prices we started with, and here are the updated prices. So maybe Global Atomic breaks down and comes down and tests 263, okay, and maybe URA never goes lower than that 23, all right? It's possible. I'm just kind of talking here. But the thing is that some of them might have relative strength versus the others because you can see what kind of a day NextGen had. Look at its volume, all right? So just kind of zooming back, we'll give ourselves some space to see. Look at the volume today. I don't know how high that is relative to the other days, but it's definitely in the upwards bounds. Okay, it's like in the upper 80% of all days in volume. Okay, today. So it's getting a lot of movement here at this price level. All right, and you got something like Global Atomic, even though the candle looks nice with that wick on the bottom and all. Look at its volume. Okay, it is extremely small. Even historically, this is very, very low volume. Okay, and that's what I was talking about on here, that some of the volume might not make sense from one equity to the other, all right? Because these things are just kind of waiting for them all to catch up with each other. Some sold off quickly, some sold off slowly, but they're all trying to find that same equilibrium with confluence with each other as a sector. Does that make sense? So that's the kind of thing you're kind of looking for, all right? So basically, in terms of price, and if you want to buy more, nothing has changed, right? Nothing has changed. You're looking at your lower bound levels. I feel extremely confident about these lower end levels, that if you get down here, you can just buy. Maybe you dip a few cents below or whatever. You can't call the exact penny, okay? But you can for sure call a very strong level, okay? And typically, the reason why we do 2% is because it kind of gives you 2% up and 2% down. It kind of gives you a 4% range around a price. And the reason you do that for yourself is that sometimes things are extremely bullish. I mean, super bullish. They're the talk of the town. And everybody's looking at that technical level, right? Everybody's aware of it. So you might not quite make it. Some people start getting in right before you get there, okay? And then in other things, you might be early on something. It might not even be that bullish, all right? And so even though it might be a legitimate, strong technical level, it might slip a little bit below it, okay? So you have to measure that in mind where you decide where to buy. So that's why I gave these things within 2% here, okay? And so in the instance of things like NextGen, all right, on this first day, I was off by, 9 cents of my target. But here we are a few days later, and I was only off by 3 cents of my target, right? And this is obviously holding up every time we come here. It's holding up. So that's obviously the key level, right? So we were obviously right about it, and it's okay to get retested. But when something's really bullish, it might not quite make it all the way. Other things, they might dip a little bit below, all right? So, here on Global Atomic, now we're 3 cents below our first target, right? So that's the kind of thing we're talking about, all right? So just keep all this in mind. Essentially what I see market-wide, if we can go ahead and switch to gold, nothing has really changed here either, all right? So when we first broke out way back here, we were talking about it being a war premium, and if anything changed in the near future, this would probably roll over, retest this trend line before it did anything forward to the upside. But once it kept going, we acknowledged that ain't happening, right? That's not coming back. What we're probably going to do is come back to the 50. That's what we did. Then we talked about riding to the 50, which we have. And now we talked about potentially getting the flush down, and where would it go? We talked about the 200. So will it get there? Maybe, maybe not. Doesn't really matter, but it's clearly moving that way. I think that this is probably the lower bound. I think an absolute extreme low would be something like this, like 1835. I mean, it's just hard to see it getting lower than that. Or let's see what the weekly is on the 50. Yeah, 1850. There you go. That's a real strong one right there. So you kind of have some confluence. 1850, 1858. I mean, that's such a strong level right there. So it wouldn't surprise me at all to come down and touch it and get a rebound there for sure. But again, I'm less worried about spot prices, okay? I'm less worried about spot prices than I am equity prices, okay? Because right now, I'm telling you right now, the equities are going to lead the way, okay? Everybody knows that these spot prices are going higher. Now, if you want physical gold, I mean, yeah, you probably want to buy, somewhere between right now and down right here, okay? And that's probably your last chance. But if you're looking at the equities, you really kind of need to ignore gold price right now. No, I know that sounds counterintuitive, but you got to understand that they're kind of doing their own thing for different reasons, all right? As long as the Fed's pushing the market around, these things are going to sell off at different levels for different reasons. I mean, just look at the sell-off in gold. The gold spot price has fallen, nothing. 6.5%? Nothing. Let's look at how much the GDX sold off. Let's see. Yeah, 17%. Right? So don't worry about the gold too much. You need to look for the levels we already know about and talked about here on the equity itself, okay? Because look, just a reminder, in case you're losing track, I just want to remind you, zoom out. Let's go back to the weekly chart. Gold, okay. All right, just zoom out. Look at this baby. This baby's gonna bust. This baby is gonna bust. Do you see this thing? Do you see how massive this cup and handle is? It's a cup and handle within a cup and handle within a cup and handle. It's the inception of cup and handles, guys. This thing is gonna bust all over everybody. I mean, it's gonna explode. Okay, so you know, the only thing certain about gold is that it's destined for higher prices, right? The only thing that's uncertain is whether, you know, you're going to buy some, have money, you know, to buy enough in time, right? So just kind of make that a priority. Same thing with silver. Don't worry about the spot prices. I'm telling you, I've been through this ride. I've been on it enough to know what's going on here. You need to focus on the equities. It's really the same thing for the uranium price too. Let's see what happened today. Yeah, we went down again. Look, it wouldn't surprise me to come, you know, test this level. $50. That's also a nice round psychological number. We have multiple touches here on this, so that level makes sense to me. I break beyond that, why not touch the 50? Man, I'm telling you, you touch this 50, you're going to rebound so hard on this thing. I mean, it is just going to go straight up here to the next resistance, which is about $74. Okay, so you can look at it, and it can help you determine when the next leg up might be, right? It might help you determine when Sprott's going to take off. You know, people might be waiting for it to come down here, and then they're going to start loading in the Sprott, and then that will, of course, coincide with a surge in the spot price, and then a surge in the equities. So that makes sense. You can do that, but honestly, focus on the equities themselves. Stay on the weekly and talk about some ratios. Ratios are extremely underrated, underutilized, and just, you know, overpowered. First, we have the GDX URA, right? A very long-term trend going back to 2011. In this past decade, gold has outperformed uranium until here, right? In November of 2020, uranium started to dramatically outperform gold. We broke this trend line, but you can see quite clearly that this trend is legitimate. This is a legitimate level because we gapped down below it, tested it, came back up, tested it, came back up inside it, and I've tested it multiple times. It doesn't get any more clear than that. So I am confident in this level. I'm confident in this trend line. So we need to watch it closely because it's going to be pretty exciting to see which way it breaks, to be completely honest with you. You know, it doesn't necessarily mean anything good or bad for either one of these things. We know both gold and uranium have a lot more upside to go. But certainly, much like the gold to oil ratio, it will kind of help tell us what kind of, you know, crisis we're going to get, what the financial world's going to look like. Because if you look at others like this, like the gold to uranium spot price, I talked about this before, and look at this. That's kind of its own little Wyckoff right there too, isn't it? So look at this stuff. So this is also on the weekly. I mean, look at all these touches that I highlighted for you, okay? And then back here in January 16, gold gained on uranium spot price substantially, all right? And then we came back here to this historic strong level. That 29 to 1 is a huge level. And then when we got here, I said, look, we are coming on historically oversold levels. Not only are you hitting strong support, but look, it's dramatically oversold. This tells you one of two things. Either uranium spot price is going to drop, or the price of gold is going to upshoot dramatically. And we know gold's undervalued, but so is uranium. And of course, these things can both go up, but one can go up more than the other, and that can change the ratio too, right? But what it's really telling you is that gold is due for a bounce compared to uranium. And it looks like that's holding out because look what's happening already. Gold to silver coming up on significant resistance. This suggests that silver is due for a rebound against gold. All right, this goes back to the 70s, and you can see that we are at an upwards level that is significant. So this is a level where you can expect silver to start outperforming against gold. Now, a break to the upside suggests that you really need to start buying silver. Okay, you really need to start buying silver equities. They're becoming dramatically undervalued compared to gold. We're going to go back on the daily time frames and talk about uranium again a bit with the Sprott uranium price to equities. So after breaking down out of this, Cameco is maintaining its outside bound. I mean, it looks like it wants to start outperforming the spot price. Okay, Energy Fuels telling a bit different story. Okay, it is actually making upwards movement inside the trend, suggesting that Sprott is outperforming Energy Fuels still, and it has room to the upside. Next Gen holding in as well. Okay. Really, it's still hugging that 50. I mean, there's no clear indication of what it wants to do yet. I mean, it's not telling you enough. Then you have DNN. DNN is underperforming relative to Sprott, probably most egregiously. It's indicating that it's one of the worst performers. And then the URA ETF. So it looks like we are going to break out of the ascending trend and perhaps consolidate sideways. Again, whether we break up or down will be significant, but you could expect eventually over time that this is going to start rolling over, right? I mean, it makes sense that eventually the miners, all the equities are going to outperform the metal. I mean, it just makes sense. But that hasn't happened yet. Okay, so it's important to look at this to kind of see when you get that signal. Because this helps you know where best to keep your money. I mean, is it better to keep it in Sprott? I mean, if this keeps going up, yes. It's better to have 100% of your uranium money in Sprott than it has to have any of these miners as long as it's going up. All right, but once it breaks, once it starts to roll over, it's a different story. Then you can start reallocating your money in a different kind of ratio. Comparing GDX to tech, once we broke above this 200, we kind of made a clear upward move, all right? And we've come back to retest this 50 once, twice, and then failed on the second attempt. It makes perfect sense to me to come and retest this 200 to try to stay above it. I think if you do, that marks the pivot, that marks the turn, if you don't stay right here, of course. But that's really going to mark a significant change in the upswing and the momentum for GDX compared to tech. Not going to lie, I don't like the look of Nutrien right now. This is a bear flag. Remember when we first, I was talking about a bear flag earlier in uranium, about if you were to kind of come down and do something like this. Remember that? Yeah, that's what this is doing, and I don't like the look of this at all. I think if you're in Nutrien, you really consider your profit right now and where you're at and what your exposure is. It seems risky to me. I don't necessarily like the chart or the momentum. I think, you know, given everything we've talked about this whole deal and what the target is, I mean, you really need to weigh that, especially if you haven't taken any profits. IPI is telling a bit of a different story. It's behaving very similar to the way uranium and most of the gold equities are, right? We kind of came down to that first major support. I think any further downside, there's not a lot of horizontal support to lean on. Maybe the $72 mark. I'm going to go ahead and put that in there and see how that rolls out in the future. 72. But the 50 on the weekly is pretty far away. Even the 200 has confluence. So, yeah, this is a bit tricky. I think if you didn't take profits here, you need to weigh where you got in. You just need to watch this one. If it starts to roll over here, I'd look for the 72. Beyond that, you're coming down for sure. I don't know if this is going to happen or not, but I mean, Jesus, something's being set up. Okay, so all I can tell you is that if we get the downside, you know where to look. Okay, you know where to look. This is not hard to identify yourself. Okay, just look for, I'm not an artist, I can't draw this crap, but you know, you look for Bart Simpson, right? Right? That's all you're doing. You're looking for Bart Simpson, okay? But you know, your realistic primary target's always where you took off from, okay? So you make the wedge up, you come down, you make your first shoulder, okay, and then you get 2, 3, 4, 5, and you go down. Just keep an eye on it, guys. If we get the downside, you know where it's going. Vital metals, you know, it looks good. It's had big news. I think the only thing holding it back is the broad market. I think if you can come down and test these levels, we do keep testing them. I would really encourage you to consider getting in. It's something you can weigh for yourself and your own risk to reward profile. Me personally, I am going to add probably tomorrow. I didn't do it today. I was just too busy and I didn't have an order in. But I think that once the fear is out of the market, this kind of has every reason to go up. I mean, long-term, extremely bullish company, and it's still early. Haven't talked about Arianne phosphate in a while, but this is another kind of the similar setup. One of North America's only and best phosphate plays. So we continue to isolate ourselves from Russia and her resources. We are going to need all of this phosphate. And you have a resource as large and clean and pure as this one is. I mean, it stands to reason that it has a future upside. It is early in the project. This is a speculation. It is risky. But I think when you get back down in the levels like this, especially if you can touch this trend, I'm personally going to buy. Okay, I'm just telling you what I'm going to do. I'm going to buy if it touches down here. And then I'm just going to wait. I mean, give it, 2, 3, 4, 5 years, and I think it'll be sitting pretty. If you're looking for exposure in nickel, this is my favorite nickel company. At today's price, what is it? Excuse me, market cap, 95 million. You still have a lot of upside left in something that should only take a few years to realize, I think. It's a great play here at this price. Obviously, this would be your downside risk should you enter here. But, you really have the potential to kind of cup and handle this thing. I mean, we'll see. I know we always start with the bond market. I know, but we're saving the best for last today. Plus, honestly, I just kind of got on a roll and did what I did, and now we're here. So, all right, not a lot has changed in the bond market. Okay, you had some bids, and then now you're getting back up to where we were. I mean, we're still testing this level. Really, the bond market's pricing in a recession, and then you had the GDP today, right? We're down 1.4% in the first quarter. So what are the odds that in the next quarter we are also negative or declining? I mean, that's going to signal the recession in an official capacity. So we're already in it. You're starting to see the layoffs. You're starting to see companies miss earnings. So what the bond market is doing, it's pricing this in. Okay, it's pricing in the recession, which should and likely will cause the market to continue to roll over. Okay, the market's going to continue to collapse until the Fed changes its narrative, until the Fed rolls over. You got to understand the thing about bear markets, and I've never lived through one. You likely have not either, but I've done a lot of studying about them. I've read as much resources material as I possibly could. Okay, and then the reason why bear markets kill people is because they're slow. And everybody has been psychologically trained like Pavlov's dog to buy every dip, right? Because every time you get a dip, it just goes up and it 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 goes up, right? You got a friggin' pandemic come. Everything was shut down. Couldn't even go to work. And then it just went there anyway. I mean, how stupid, right? It's like you've been conditioned that no matter what happens, the market always goes up. That's why this bear market's going to be so dangerous, is because people are going to always say, here, oh, this is the dip, just buy the dip. And over time, maybe you bought here and then you're down here, but then it comes back up. You're like, oh, okay, I'm still good. But over time, it's just going to wear you out. It's going to drain you, right? If it were to sell off quickly, it might scare the hell out of you. You might get out here, but because it's going to go down so slow over time, it's going to take people out, man. And that's how they work. That's why they're so dangerous. That's why people lose more money in bear markets than they do these crashes, okay? So understand the psychology of that, and just understand that that's exactly what's going to happen unless the Fed, or until the Fed changes policy. Because as long as these rates go up, there is no reason for that not to happen. Look at platinum trying to bottom out. Look at that. Looking good. I know we had a couple of viewers that are really into platinum looking for a bottom. This could be it. It could be close. If you want to push it to 900, hey, I wouldn't blame you. But you're certainly, it stands to reason that you're getting close to this bottom. Let's switch to the weekly. Yeah, I mean, it's looking good. I would, if I wanted to buy platinum, I would absolutely buy it at $900 for sure. I'm just going to talk about Bitcoin today, just to show you that this was a bear flag. All right, after the head and shoulders, after the Wyckoff, all right, and then the rally to the double top with the head and shoulders, which broke below, retested, failed into a bear flag. Okay, I mean, this couldn't be this is like the greatest technical analysis chart of all time. You came down, you made this bear flag, clear as day. I made a video right here telling people not to buy because this was not going to happen. I told you that it was going to roll over. However, I did give you the context clues as to whether it would be legitimate, right? And we talked about volume and all kinds of things. If you haven't watched that video, you can go watch it. But this was an easy call that we were going to come down. And now that we've broken below this flag, it's really time to consider how low we're going to go on Bitcoin. And you know, it stands to reason that we're going to come down to 29,000. I mean, just look at what 29,000 looks like. Okay. I mean, where do you think it'll go? I mean, as long as the Fed gets aggressive, as long as the Fed's going to tighten, Bitcoin, crypto generally will roll over. Okay. But with that being said, there's pretty much a one-to-one direct correlation with the price of Bitcoin and the Fed and their balance sheet. And as long as they're expanding and as long as money's cheap, Bitcoin goes up. And that's something that a lot of people don't understand. Look, I've made so much money in Bitcoin. I'm not a Bitcoin hater. I just don't want to get caught with this stuff in the end because I'm not a believer in it, right? I don't personally believe in Bitcoin, but I will absolutely make money on it, okay? I will absolutely make money on it. But what I don't want to do is lose money on it, all right? And being in crypto right now is a losing proposition because we're tightening. We're threatening on raising rates, okay? And this is all bad for Bitcoin. So it's just like tech stocks. I mean, these higher rates mean lower prices. I mean, that's just how money works. You know, the higher the interest rates are, the lower the prices have to be. Okay, so until the Fed comes in and does QE5, it's going to roll over. That's your first target. That's your second target. By the way, all credit to Gareth Soloway. I saw him on Stansberry Research, and he put out this chart. I'm just going to share it with you. This is not my discovery, but it is interesting nonetheless. So this is Bitcoin right now. All right? This is the current bar. This is Amazon in the year 2000. And he made the analogy that, you know, crypto is early and it's going through this huge bubble just the same way, you know, a lot of tech did in the year 2000. And he just showed the comparison, how eerily similar Bitcoin is to Amazon at what was really their peaks for that time at the end of the bubble. Okay, because you can see that Amazon went on. And by the way, there's even similarity on the way up. Kind of get this leg here and all that, but it went from $121 all the way down to what, $5, $6, before going all the way up to, you know, 3,000. But anyway, I don't think that happens to Bitcoin, but surely it's possible. Okay, the Fed prints QE5, we go into this hyper bubble blow off top thing. Yeah, maybe Bitcoin does get that high. You know, I'll be owning it. You know, I'll have exposure to Bitcoin when the Fed starts printing money, but not a day sooner.